Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are looking at metals and gold prices kind of finding a home right around 1,300. We've seen a little bit of a dip below. It got a little bit above. We kind of are using that as our magnet level. Still holding near the year-to-date lows. We're just above them, but we're not really seeing a whole lot of momentum in either direction. Since the big move below 1330 and we traded flush down below 1300, it's just kind of been a slow retracement back. And now we're just kind of gravitating towards this 1300. So technically things are still looking bearish. But we are sort of clinging to this 1300 level. That's a level we'll watch very closely. And if we look at the dollar, was the dollar helping or hurting? Well, today the dollar pulled back a little bit, but if you go back over the last 7 weeks, it's rallied 6 out of the last 7 weeks. So there certainly isn't anything to be concerned with, any pullback in the dollar. We had the easing of tensions over in Italy. We've got all kinds of trade talks being thrown around, whether it's with China or whether with some of our North American allies. It's uncertainty is rising here, and I think that the dollar pullback is probably a little bit welcomed here. You don't want to go down too far. You want to keep the trend intact, but certainly the last modest little pullback isn't seeing what we'll call a bull trap for people to look to buy with the idea that it's going to continue lower. I think right now that the dollar still remains very strong. And lastly, let's look at positioning. We've been talking about speculators getting rid of their longs, getting to the lowest point we've seen since last summer. And I think that over the last week, from May 22nd to May 29th, which is the last reportable period, we saw them get back in. They're back in with both feet, the highest level since April. So I think right now speculators are kind of keeping the market from going down, opportunistically looking for gold to probably move, maybe not necessarily a dollar gold trade, but maybe a geopolitical trade, possibly having a relationship with rates and looking at the U.S. economy. Yeah, we had that really strong jobs number, but we also have a Fed meeting next week, which could signal more rate hikes or less rate hikes. And I think that having some positioning and some defense in gold is probably where we're seeing some of the speculators get back in as aggressively as they have. So right now, gold price is hovering at 1,300. Speculators are back in. That means that there's a little bit of bullish on the horizon, but we'll have to wait and see. June FOMC is going to be the key for gold moving forward. This is Todd Colvin coming to you from the floor of the CME Group.